Hi there, traders. It was an aggravating day today on the markets. We just had a lot of up and downs, and we got burnt. At least I got burnt on 2 trades, and that's pretty much the max I'm willing to give out on one day. Let's go through and take a look at exactly what happened, and we'll start out with the Great Britain odd. Very disappointing. We'll start up in the one-day chart. This is what made this a pain trade. You can see that the chart the pair had been finding resistance at this 168.90 level, and you can see that the cross had a daily close above that, so that did favor a continued move higher. But if we jump down on the 4-hour chart, you can see that the pair most definitely broke through that last night, and it looked as though that we were going to sit at the bottom. And then this is something I did see before I went in the trade. That's a pretty bullish candle, but if we look at the bullish 4-hour candle, it could have favored, but I mean, I didn't expect anything like that, obviously. But if we look at the 15-minute chart, going right back to the fibs play, it had a pretty nice setup, and let's go through and set the fibs up for you so you can get an idea. We'll just set it from the top to the bottom, and you can see we had this reversal. I mean, I had to be honest, I didn't think there was any way I was going to get into a trade in this pair today. And then we had the reversal, and what I waited for was a key. There's the 50 fib. I waited for a pullback, and I went short. I think I was in at 169.14. It looked pretty good at first. I mean, we went all the way down towards what was the low here, 168.97. I guess that's only 14 pips. Then we meandered around, and then bam, right at 11:30, the pair shot up, and it basically closed us out. And I mean, it was basically going for the highs, going for those stops, or basically establishing itself. If we look on a one-day chart, just above the recent highs, which right there was 169.50. Can't run them all, you have to shake it off and move on. The next pair we had was the Great Britain New Zealand, and this pair had an interesting setup actually that we did not take, well, because it really wasn't. I don't normally try to even enter trades before 9 o'clock Eastern time. I don't know where you guys are located. Everybody's a little bit different, so didn't really have a setup there, but I was looking for a back up into this, and we just missed it by a tiny bit there at 215, and that's the difference between a good day and a bad day, because if we had hit that, we would have gone short right around 194.36, and that would have been 176 pips, and would have washed out everything else. But that's how the cookie crumbles. So we didn't get a trade in the Great Britain New Zealand, but we did see that this pair once again did close below the 195. But once again we had this wave. These are the hardest things to trade, these V-shaped trades. What's interesting is these would be great to trade if we were using a 5-minute chart. Let's just show you. There's something when the markets are really volatile. This is actually a pretty easy way to trade. If you look on this 5-minute chart, and we're going to throw in just a simple MAC indicator, and all you would have to do is on these trades, when you get the breakdown, boom, right there, go short from 194.09, and when this line crosses here, you would have closed out at 193.20. That would be a nice 80 pip change, and then you would wait for the break on the other side, bam, and this is 195.37. You just stay when you get the cross there again, you get out at 195.40. That would have been a great day, but I'm just showing you that because this is a perfect scenario for the MAC. Back in 2009, when we had the pound and the euro moving, 200 pips a day, I used to trade quite a bit like that and pull in a lot of pips. Let's remove that indicator. So that was how that was the trade setup for the Great Britain New Zealand. Let's take a look at the yen crosses, because we did have that EURJPY trade last night in Asia, and for some reason this opened on my other monitor. Let's see. Sorry about the delay. Well, we'll do it this way. The Great Britain JPY, the Euro JPY, you can see in this cross that the pair just basically was on a one-way street lower. We had the I've had the fib level set up for this, coming in pretty easy. It looked like a pretty nice technical setup. Actually, to tell you the truth, last night we had the push lower, and honestly, I didn't enter the trade until right here at the 134.90 level, which was about, what, 12:30 Eastern time, and I was looking for a push up towards the 135.60. Only risked 30 pips though, because you can see this range was kind of slow. It's a 56 pip range, and we were lowered closer to this level. This trade was closed out rather quickly too. Sometimes you can't catch a break, and but it did have definite legs. It went down another 100 pips after that, so we'll keep our eyes on that. For it's going to have us a nice range to trade in tomorrow. And the Great Britain JPY, same thing. You can see that this pair today. Actually, let's just do it this way. It's not setting up correctly. The Great Britain JPY, you can see today was just basically a cluster of bouncing all over left, right, and if we jump this up right there, you can see that we almost had a very similar setup to the EURJPY in this pair. The reason I did not jump into this trade though was just that to be honest, I wasn't looking at that larger move. I was looking at the shorter move in the early trading, and I didn't like the momentum. And by the time I had a signal here, it was at 157.49, so it didn't like the price action there at that moment. Could have had an opportunity to go long, and basically this was just a total wash, this trade today. But let's look at the bigger picture, because we had a lot of interesting stuff happen today. Let's start off with the EURUSD, because this guy definitely broke below the 137.10 level. There's no doubt about that. And so what could you do here right now if you want to do the larger 50 pip trading that I was talking about? You can see that this pair definitely has broken this range, the higher highs, lower. So the momentum now at this point would be for the trade lower. So what you can see is people might be looking for a pullback of today's move, which was from 137.31 to 135.92. Let's make this really big so we can throw a fib level off it and just get a better idea. So heading into tomorrow's trading, people could be looking for a move back, and I mean, this is a little bit rough. If we were obviously we'd do it a little more precisely if we were going to make this actual trade. Basically, let's say to the 136.61 level, and if they get that move to the 136.71 level, which was the 50 fib from yesterday, they could re-enter that trade. And if you re-entered that trade, then you would move your stops. Jeez, what a pain. You can move your stops to just above this range here, 137.38. You really only put it like 10 pips. So let's say 137.50. You get in at the 50 fib, and then you just ride it lower, and you keep looking for and each time you have a substantial move lower, you would set the stops to it. Set the stops to the next level. I'll actually keep you guys up in track with that. If anybody, actually tomorrow, I'll run the fibs off that, and I will announce when that trade goes in, because you can keep adding to it. And if on this particular trade, you could be looking for a much larger move. You could be looking for a move all the way down to this one. Actually, it should come up to, let's see. You could be looking for a move up. You could be looking for a move all the way down towards the 133 level, which is the composite of this entire move. So let's run some fibs right there to give you an idea, and you can see that that is an interesting level, the 133 level, because you covered this gap right here that we had spiked open that never closed, and it's right in the middle, right below the 134. Now that would take a little bit, and if we broke the 135 level, that would definitely give us the momentum, hopefully down to that level if we want to trade like that. So we'll keep our eyes on that, and I will keep you guys up to date, and I'll actually I'll tweet out any entries that should occur in that trade. And so you keep building on it, keep getting the break even, so by the time you get down here, you could have 4 or 5 pips, 4 or 5 different lots set in there, and you could have it scattered between the 137.10 and the 133. So you could have anywhere between what did we say, 133.66. You could have anywhere between like 366 pips, 180 pips, 200 pips in the different orders, and you close it out when you get down to your target price. If we get down to the Aussie USD, you can see this pair really did much of nothing today. Still stayed right there by the 9.9509 level. This pair could drive you nuts, and that, this was a big reason for the downfall of my trade in the Great Britain odd. You can see that the bottom just fell out of this baby right here at 11 and continued to push higher, where it looked like it was going to rebound. It looked like it was going to rebound right there at the 10:30 hour. New Zealand continues to find a base right here at this level at the 82.01, 81.60. So we're going to have to watch that, and as long as it doesn't break that, up is the way to go. Yen, not much of nothing, just hanging out. This has really just become, once again, a currency that you can use to get into other pairs. The Great Britain JPY, EURJPY, and so forth. Yen, it's just becoming a feeder because the spreads are getting the ATR's average range is narrowed down so much. So all in all, today was a negative day, down 160 pips, which actually brings us to right about definitely a little bit below break even for the month. Crappy month, but sometimes when you just you have to fight through these the trick is not to lose a lot of money during these grinding out periods, and so once we get momentum one way or the other, we'll definitely be able to capture some pips. All right, everybody, talk to you tomorrow. Tomorrow is the end of the month for me, and I will close out the books, and I'll have everything up on the well, I'll tell you guys about it in the Currency Watch tomorrow, and everything will be up on the blog. Talk to you guys later.